That's one of the key things to learn is always be able to pivot. If something doesn't go your way, just have to figure out how can I make this work and, still move forward.
Yeah, and that's one of the reasons why I say it's very, very important as a passive investor to vet the operators and make sure they have some form of background in business. Because yes, we're dealing with real estate, but we're buying real estate that's basically a business that has real estate associated with it.
Exactly.
You have to know how to manage people and put in systems and procedures and processes in place and monitor those KPIs. And like you said, be able to pivot whenever necessary.
Welcome back, everyone, to the Passive Road to Retirement podcast. I'm your host, Andy Jarrett, joined by Dan Hanford. Dan is one of the managing partners with passiveinvesting.com, which is a national apartment investing firm. He has led this company to acquire over 3,500 units with a portfolio valued at over $561 million. He's also a passive investor himself in over 10,000 units spanned across 44 different syndication investments throughout the U.S. Prior to getting started investing in real estate, Dan had an extensive background in starting multiple 7- and 8-figure businesses from scratch. Dan is the founder of the Multifamily Investor Nation, which provides free multifamily education to over 50 nationwide and international meetup groups, 40,000 members strong. He's the host of one of the most popular investing podcasts on iTunes called Multifamily Investor Nation. And Dan and his wife, Dennae, along with their 4 children and standard poodle, reside and work in Columbia, South Carolina. Dan, thanks so much for coming on the show. It's a pleasure to have you here.
Yes, Andrew, appreciate it. Thank you for inviting me on and looking forward to sharing with your audience here.
Absolutely. So for those who aren't familiar with you, maybe you can just give a little more background information on yourself.
Sure. Yeah. So, my background is actually as a chiropractor at first. So I'm actually a chiropractor by trade. And one of the things that I learned early on as being a chiropractor for working for myself, because I had my own clinic, was that I was really kind of stuck in a job because I could only see so many patients an hour. And so I was capping my income. Right. And if I wanted to go on vacation, guess what? I had to continue to pay my staff, had to continue to pay the overhead. And so it would actually cost me money to go on vacation. So I never wanted to go on vacation. And so I quickly learned in the first 2 or 3 years of practice that I really needed to start to hire on other people to do those things that would allow me to have more flexibility. So started hiring on some associate chiropractors to work for me, and then started to expand into the medical side where we did an integrated clinic where we started to hire on medical doctors, nurse practitioners, PAs to actually work in our clinics to see some of our patients, and doing what we call non-surgical orthopedics and sports medicine, doing a lot of prolotherapy, PRP, and stem cell treatments for orthopedic conditions. And really about probably 6 or 7 years ago now, we made the pivot to completely remove the chiropractic services from those clinics to really solely focus on those medical treatments, primarily because there was nobody else in the area that was doing that, as we had a little bit of a niche in the practice, but it also was the highest profit drivers as well. So it allowed us to really focus on what we were making the most money on, but also having the greatest impact in the community, which was really neat. And we grew from 1 clinic to 4 clinics. We still have those 4 clinics today. They're cash flowing very nicely, 100% debt free. My wife and I have those. And being able to have those allowed us to be able to have the net worth and liquidity to be able to be signing on the loans for some of these larger assets, and allowed us to be able to scale very quickly. And as you mentioned in the intro there, we have a little over $500 million in our portfolio now, and we've been raising millions and millions of dollars over the last several years to be able to acquire these assets from our trusted investors. And one of the main reasons why I went into real estate was from the tax side of things, because I was writing large 6-figure checks to the government, not just once a year, but 4 times a year. Because once you start making money, they make you pay in 4 times a year as a business owner. So they get to hit you more than once. And remember that. So I just remember writing those large 6-figure checks, like there's got to be a way for me to reduce my taxable liability, and investing in real estate really was that ticket that allowed us to be able to reduce our taxable liability and also be able to make a great income by putting these types of syndications together and starting the group passiveinvesting.com, which has allowed us to be able to kind of grow and scale to where we are today.
That's incredible. So it sounds like you were actually a benefit of passive income prior to real estate. Is that maybe what kind of turned you on to the real estate investment, along with obviously the tax benefits?
Yeah, I mean, it wasn't really what turned me on to the real estate, but it's something that I knew I needed to do before I started to do it on my own. And so once I made the decision that I wanted to be in real estate, I hired a mentor, started to invest passively, and then from there continued to grow into the active role as well.
Nice. Now, our listeners, a lot of their number one question is, what can I do to create passive income? Knowing what you know now, what would be one of your top strategies for creating a passive income stream for somebody?
Sure. Well, I like business in general. So even outside of real estate, I like to have a couple of different businesses that are generating passive income for me. So even my medical clinics at this point are passive for me. I spend about 1 hour a week managing them. I have a corporate meeting with my corporate team once a month and manage them from that kind of perspective. And then they kind of, go on and do the most of the day-to-day stuff. So I'm not having to do that. But I even also have an online company where we sell skeletons and skulls and brains and hearts and all kinds of plastic models to colleges, doctors' offices and universities across the country and around the world. And so we also have other alternative income streams that are coming in. And so outside of real estate, that's what I like, is having some businesses that can produce some income. Right now, we're also looking at maybe even doing some absentee franchises and maybe even doing a couple of different things like that from some businesses that we really like and we don't have in our area. And I'm like, how can I bring those here? And if I can be an absentee owner, would love to be able to do that. Hire on a team to be able to go manage that and still manage it from a corporate perspective. But then, of course, the real estate side, I mean, obviously you can't beat real estate. You get the depreciation benefits and also the income from that, and being able to invest passively in apartments or self-storage or industrial or medical office buildings or maybe even car wash businesses. There's always different types of avenues for real estate to be able to invest in. And that's one of the reasons why I like it, because I'm the type of person that kind of gets bored sometimes doing the same thing over and over and over. And so being able to have the options to be able to, like right now with our group, passiveinvesting.com, we have the multifamily syndications that we're doing. We have a self-storage fund that we've started to acquire assets. We have a real estate debt fund that we have started. And we have other things that are coming down the pipe over the next probably 6 to 12 months that'll be exciting for us to be able to show to our investors, but also for us to continue to have some alternative options for our investors to invest in, so that they have other options for passive income.
Sure. Incredible. Now, obviously, we have a lot of different investments going on now. Usually, someone has, at some point of their career in investing, has an investment, didn't go 100% how they thought it would, or maybe just turned out to be a bad investment. Can you just kind of speak on maybe one investment that didn't pan out how you thought it would and what you learned from that?
Yeah. So, I mean, all of our assets so far have been able to, achieve the projections that we have, but they haven't all started that way, right? So one of them that's kind of sticks out to me as an asset that we have that when we first underwrote it, we thought that we could achieve a $250 rent premium by spending $11,000 a door in renovations. And so one of the things we do in the very beginning when we acquire a property is we try to do 2 units we do 2 units and try to see if we can achieve those rents. And that way we can prove the business model before we actually just renovate all of the units, right?
Right.
And so in that particular property, that's what we did. We renovated 2 units, put them online. Nobody was going to be biting at them at all. Like, it was like crickets. It was the weirdest thing. And we thought everybody would love them,
Right.
So we put it out there, no bites. And then we just talked to the property management company and said, let's just start dropping it by $25 until we hit that number. And we got down to $175 and both of them rented very quickly. And so we realized that, okay, $175 is the rent premium that we're going to be able to achieve, but we can't do an $11,000 renovation and I only achieve $175. Right. So we had to go back to the drawing board and see, okay, what do we need to do to be able to reduce the renovation scope so we can still maintain the returns for investors, but still be able to achieve the $175 rent premium. And so I believe that went down to about $8,000 to $9,000 a unit in renovations. So we were still able to do the renovations, but just a lower scope of renovations, but then be able to achieve that $175 and maintain the investor level returns. And that property is doing well right now and currently actually under contract for much more than we thought we were going to sell it for, which is great.
Congratulations. Yeah, that's one of the key things to learn is always be able to pivot. If something doesn't go your way, just have to figure out how can I make this work and, still move forward.
Yeah, and that's one of the reasons why I say it's very, very important as a passive investor to vet the operators and make sure they have some form of background in business. Because yes, we're dealing with real estate, but we're buying real estate that's basically a business that has real estate associated with it.
Exactly.
You have to know how to manage people and put in systems and procedures and processes in place and monitor those KPIs. And like you said, be able to pivot whenever necessary. And that's what we also saw this past year with COVID is those operators that were able to pivot when they needed to pivot were able to be successful in it. And those that didn't basically just, crawled up in the fetal position in the corner and cried and died. Right.
Yeah, exactly.
And so those are the properties that are coming online now that are hurting that need somebody to come along and put a little TLC to it. And somebody that has a little bit of a more business acumen, if you will.
Now, I know your properties fared very well during COVID and came out strong. Is there anything you'd like to share? Maybe, that you changed differently during COVID or, anything you want to elaborate on that?
Yeah. Well, one of the things that really helped us with COVID is that prior to COVID, we had made a business decision to actually pivot from acquiring the kind of lower end Class C assets and lower end Class B assets to focusing on the kind of higher end A class and B plus assets where everybody else was kind of staying away from. And it proved very beneficial for us to do that. And even now you're seeing a lot of operators going after these nicer assets now because they saw what we saw back then. And that's why we pivoted, because we knew that cap rates were compressing to the point where it wasn't that much different to buy a Class C asset at, a 4.5 cap where you could buy a Class A property for a 4.3 cap. There wasn't that much of a delta between the two. And so for us, we made that decision and we're very, very glad we did. And that's one of the reasons why our portfolio fared very well is because for the most part, COVID impacted the lower end properties the most because those are the residents that are in a service related position that was more impacted by COVID.
No, that makes total sense. We're actually, actively searching higher, B-class properties as well. So I totally agree with your strategy on that. Now you have a lot going on, obviously juggling a lot of different hats. What's some of your habits that you've, picked up over the years that help you, strive that peak performance, always on point?
Sure. I would say there's two things. Number one is every morning I try to spend time with my wife. And it's because, a lot of times relationships can be hampered by business and being so busy that you don't focus on each other. And so one of the things that my wife and I try to do, and we're not perfect with it, so it doesn't happen every day, but it's something that we try to do. Like even this morning, our kids are back at school this week. And so she, of course, we're trying to run out the door. And I said, let's spend at least 5 minutes. Like, come on, 5 minutes being late is not a big deal, And it's not really being late, but being like, instead of the doors open at 7:30, being at 7:35 or 40, bell doesn't ring till 8. So we can spend a few minutes there. So she always likes to be, ahead of time, which is great. But I told her, we try to spend at least 5 to 10 minutes. Most of the time it's like 30 to 45 minutes because we get up early enough and we've done our workouts or whatever. And we're sitting down, enjoying a cup of coffee and really bouncing ideas off of her and her bouncing ideas off of me and sharing what we're doing throughout the day, I think has been very, very beneficial and also keeping each other, accountable as well. But that's been number one. And I would say the second thing is that I'm a big believer in having regularly scheduled calls with your team to make sure that they are on point with where you want them to go. And also to make sure that if you need to change the vision, you can have that opportunity to change the vision, but it also gives your team the opportunity to have a sounding board to be able to bring feedback or have questions or things like that to the actual partners as well.
Yeah, those are great points. And then especially, if you have a call, every day, like we have a call, I've said every day, we always know what's going on with properties, what we're looking at, just bounce ideas off each other. Totally agree with that. Now, how has passive income changed life for your family, overall family life?
Not much at all. Not much at all. So, and I would say, and I get that question quite often, but I would say it doesn't change that much because we don't live off of that income. We don't really need that income. And so the money that we make off of the passive income, we basically just turn it around and go invest it again, right? Because we have the income coming off the clinics that we can live off of that, and then the excess we turn around and invest it as well. And so it hasn't really changed that much when it comes to our kind of daily life. But it does. But one thing I will say is that it has helped me have conversations with my children about how they can learn to do that as well. And even my daughter, who's 10 years old, we have 4 children: a 10-year-old, 9-year-old, 4 and a 3-year-old. 3 girls and a boy. My boy is the 9-year-old, but my oldest is 10, and she's been saving up her money and things like that. Nice. I said, once you get $1,000, I'll let you invest in one of our properties, right? Now, albeit it's through me, so of course, right. I'm a non-accredited investor, invest in our 506 Charlie deals,
right?
But I have her invest through me now, and she gets to see the benefits of that. And I said, immediately when she said that, I was like, do you want to be a Class A shareholder or a Class B shareholder?
Right.
She's like, what do you mean? And so I explained the two of them with her, and she's like, I'll do Class B, right? So being able to have those conversations has been really cool, and to be able to see their mindset and their mindset shift and their thoughts having happen is really neat, because it's when I was growing up, we never had these kind of conversations with my parents.
Right. Exactly. Yeah.
And guess what? Right now, to this day, they don't have the money to be able to do the things that we do because they didn't invest in the past.
Right. Earlier you start, the better.
Yeah. And I want to make sure I instill this with my kids and my family, because eventually I'm not going to be here in this world. And guess what? I want to make sure that they know how to manage the money that we leave behind to them.
Yeah. No, that's a great idea. I mean, by the time she's, 20 years old, she'll be a multimillionaire, right?
Exactly. That's the goal.
Yeah. Set her up for life.
Yep.
So now, if you could turn back time, to your 18-year-old, 20-year-old self, what would be one thing you would tell yourself, hey, this is what you need to learn, or this is the action you need to take, now?
I would say hiring a mentor and a coach, because for years I didn't, it's not that I didn't have one that I didn't have one that I paid specifically that I was like, I'll have like a weekly or a monthly call with. I had mentors in this space that I would call mentors, or, people that I looked up to that I followed, whether I read their books or went to their conferences and things like that. But to really be able to spend the time and really investing the time and the money to have a mentor that can help reduce the learning curve to get where you want to go faster. That's what I would tell my younger self is to hire that mentor, bite the bullet, and be able to get to where I want to go faster.
Yeah, compress time. That should be the main goal, right?
Yeah.
How do I get there? In 5 years versus 20. Yep,
exactly.
Now there's a lot going on in the real estate market, multifamily especially. What's one thing you're most excited about right now, and is there anything that keeps you up at night?
I would say from the multifamily side of things, the thing that I get excited about is really trying to see some of the markets that we've acquired properties in and what's going to happen in those markets, right? Because there's a lot of conjecture out there as to what exactly is going to happen, lots of speculation. And I will tell you that what I'm about to say is speculative at best as well. But it's something that I think is going to be interesting to see how it happens. But if you look at, areas like, the Northeast, New York, New Jersey, Boston, those types of areas, and you see places like California where cap rates are like, sub 3s, sub 2s.
Right.
I think that as the population continues to grow and a lot of migration happens, we're going to likely see that happening in some of these markets that we're invested in right now. And being able to see some of those cap rates compressed to those levels will be phenomenal exits for us as well as our investors. So that's one thing that I'm really excited about. And a lot of investors right now I see really just try not to invest because they think the cap rates are too low. And if you think about it, yes, cap rates are continuing to go down and compressing, and they are low right now. But the main thing that does is it impacts the cash flows during the hold period, but it actually gives you a better exit on the other end. Because the lower the cap rate gives you a higher exit on the other end, but the lower the cap rate, the lower the cash flows. So you're at this point in time in the space, we have this kind of decision that we have to make of, are we just going to not acquire properties? Or again, kind of to answer your second part of your question of what keeps me up at night, this is kind of the question that has to be answered of, are we going to just stop acquiring properties, or are we going to be able to talk to investors and them understand that yes, no cash flow or low cash flows right now are okay, because we'll have a big win on the other end. And that's kind of really what we have to make a decision on, or I guess the investors have to make a decision on. And I think at the end of the day, they're going to make the decision to continue to buy even the lower cap rate assets because there's going to be a higher exit potentials on the other end.
Sure. And I think you're one of the proponents for lower cap rates because you don't have as much bad debt, hopefully, right? Buying a lower, 4.5 cap in a up and coming area or where there's a lot of population migrating versus a 9 cap in the Northeast, right?
Exactly. Yep.
Yeah.
You get what you pay for.
Yeah, exactly. So, what would be your number one takeaway for our audience to absorb? What's the one thing you really want to hit home with them from this episode?
Yeah. I would say that, one thing that I really haven't touched on just yet would be the idea of delegation. Mm-hmm. And whether it be in business or in personal, you got to learn to delegate certain things in your life and be willing to pay for that. So whether it be paying for a mentor or whether it be paying for, you to hire somebody to be able to manage a certain aspect of your business, or maybe even hiring somebody to mow your lawn, right? Hiring somebody to mow your lawn or clean the house. Those are things that my wife and I have learned over the years that have really, really helped us get our quality of life back and be able to spend more time with our families, is not having to worry about those things in our life and being able to spend the money to be able to hire it out to other people. So really kind of the biggest takeaway I would say is just kind of learning that kind of art of delegation.
Sure. Yeah. I mean, if you can make $100 an hour, say, for your time, why would you spend a $10 an hour task, right? More
exactly. And it's easy. And it's really easy to see what your hourly wage is. All you have to do is take your income over the year and divide it by 52 and then divide it by 40. That gives you what your typical 40-hour work week would look like. And when you do that math, you'll probably be surprised. Hopefully that it's high, not low. But if it's low, then you need to do something about that as well. But when you do that and it's really high, you'll be surprised. And it's funny because my wife and I had that conversation about 1.5 years, 2 years ago now. And I did that math with her and her eyes just got wide open. She's like, "You're right. I need you to stop cleaning the house." And so we at that point in time, it's been longer than that since we've been doing the cleaning the house, but it kind of reconfirmed the reasons why she had somebody cleaning the house, because she didn't need to be doing that, right? Because when you look at the actual hourly wage that she was getting versus, hiring somebody else to be able to do that.
Exactly. You know what else is fun math is looking at your equity multiples with your depreciation rolling every 5 years, right? On the multifamily side.
Oh yeah, that's very nice, especially when you look at the amount of money you get to keep, depreciation.
Exactly. So Dan, if somebody wants to reach out to you, what's the best way to contact you?
Sure, yeah. So the best way to do that is to go to our LinkedIn. I say my LinkedIn. You can go to linkedwithdan.com. That just brings you straight to my profile page on LinkedIn. Just go to linkwithdan.com. And then if you want to reach out to us on our website, you can go to passiveinvesting.com. On the top right-hand corner of the page is a little button there that says join the Passive Investor Club. So you click on that button and fill out the form. And if you're interested in investing with us, one of our investor relations people will reach out to you, discuss your investment goals, and see if you're a great fit for us, and vice versa, to make sure we're the right fit for you, and go from there.
Great. Awesome. Well, now we're getting into our 5 to Thrive, which is a great part of the show. So this is a word association game. Basically, I just rapid fire 5 words to you, and just
I'll see how well I do.
Order phrase. Exactly. The only caveat is you cannot repeat your answer.
Okay.
All right. Here we go. The first one is time.
Essence.
Passive income.
Passive income. Cash flow.
Resilience.
Consistency.
That's good. Leverage.
Debt.
And syndication.
Powerful.
Wow. I agree 100%. Great answers. Well, Dan, it was a pleasure having you on, and I appreciate you taking the time.
Yeah, no problem. Thank you so much for having me on. I appreciate it, Andrew.
Thank you. Talk to you soon.